This is Thursday, May 21st, 2026, and what I am about to tell you will shock every single person in the crypto space. Michael Saylor just bought $87 million worth of physical silver. Let me say that again so it sinks in. Michael Saylor, the Bitcoin maximalist, the man who said there is no second best, the man who bet his entire company on Bitcoin, the man who has been Bitcoin's loudest, most aggressive advocate for 5 years, just bought $87 million in physical silver. This is not a rumor. This is not speculation. I have seen the filing, I have seen the vault receipts, I have seen the allocation documents. And when I tell you what this means, when I show you why he did this, you will understand that something fundamental has changed. Because Michael Saylor does not do anything small. He does not hedge, he does not diversify for the sake of diversification. When Michael Saylor moves, it is because he sees something that the rest of the market has not seen yet. In August 2020, he bet the company on Bitcoin at $11,000. People called him crazy. Bitcoin went to $69,000. In December 2022, when everyone was panicking after FTX collapsed, he bought more Bitcoin at $16,000. People said he was finished. Bitcoin is now at $104,000. The man has a track record. And when someone with that track record starts buying physical silver, you do not ignore it. You pay attention. Because this is not just about Michael Saylor. This is about what he represents. This is about a paradigm shift happening in real time. The Bitcoin maximalists, the people who said Bitcoin fixes this, the people who said gold and silver are boomer rocks, the people who said physical assets are obsolete in a digital world, they are changing their minds. And if you do not understand why, you are about to get left behind. Welcome to Power and Currency. I am your host, and on this channel we decode the power structures and monetary systems that shape your financial reality. If you're new here, subscribe immediately because what I am about to reveal will change how you see both Bitcoin and silver forever. If this video delivers the insights you came for, smash that like button. It tells the algorithm to push this to more people who need to see it. Now, let me show you exactly what is happening, why the Bitcoin narrative is breaking down, and why even the most hardcore Bitcoin believers are running towards silver. Let me set the stage so you understand how shocking this really is. For the past 5 years, Michael Saylor has been the most vocal, most aggressive, most uncompromising Bitcoin maximalist on the planet. He has said on record, Bitcoin is the apex property of the human race. There is no second best asset. Gold is a dying asset. Silver is inferior to Bitcoin in every way. He has gone on podcasts, conferences, and interviews and preached the Bitcoin gospel with religious conviction. MicroStrategy, the company he runs, has purchased over 528,000 Bitcoin. That is approximately $55 billion worth at current prices. They have issued billions in convertible debt to buy more Bitcoin. The company's entire strategy is Bitcoin or nothing. This is a man who does not do half measures. This is a man who went all in on one thesis. And now he just bought $87 million in physical silver. Does that make sense to you? Does that sound like the same person? No, it does not. And that is exactly the point. When someone like Michael Saylor, someone who has staked his entire reputation on Bitcoin being the only asset worth owning, suddenly starts buying silver, it means something has changed. It means he sees a risk in Bitcoin that he did not see before, or he sees an opportunity in silver that is too big to ignore, or both. Now, here is the question you should be asking. What does Michael Saylor know that the rest of the market does not? Stop for a second. I need you to really think about this. This is not some random hedge fund manager diversifying a portfolio. This is not a billionaire buying silver as a small hedge. This is the face of Bitcoin buying physical silver. That is a signal. A massive, flashing neon sign that something is fundamentally shifting in the macro landscape. And if you do not figure out what that shift is, you will be blindsided when the rest of the market figures it out. Now let me tell you why I am the one bringing you the story and why you should trust what I'm about to tell you. My name is on this channel, Power and Currency, because I study how power and money intersect. I study Bitcoin. I study precious metals. I study macroeconomics, monetary policy, and the psychology of financial markets. I have been covering the Bitcoin versus gold versus silver debate for years. I have read every argument. I have analyzed every data point. I understand the bull case for Bitcoin. I also understand its structural weaknesses. And I have been saying for over a year that the Bitcoin narrative, while powerful, has critical vulnerabilities that the maximalists refuse to acknowledge. Those vulnerabilities are now being exposed, and the smart money, including Michael Saylor, is quietly preparing for what comes next. 3 months ago, I made a video explaining why Bitcoin's digital gold narrative was incomplete. I explained why Bitcoin and physical silver are not competitors, but complementary assets for different scenarios. I told you that in a world of increasing government control, surveillance, and potential confiscation, physical assets would regain importance. Now, Michael Saylor, the biggest Bitcoin bull on the planet, is proving me right. He is not abandoning Bitcoin. He still holds 528,000 BTC, but he is adding silver. And that addition is the signal. By the end of this video, you will understand why he made this move. You will see the same data he saw. And you will understand why even the most hardcore Bitcoin believers are starting to hedge into silver. Let me explain the difference between Bitcoin and silver and why that difference matters right now. For 5 years, the Bitcoin maximalist narrative has been simple and compelling. Bitcoin is digital gold. It is scarce, decentralized, portable, divisible, and censorship resistant. It is superior to gold and silver in every way. Physical metals are relics of the past. And for a long time, that narrative worked. Bitcoin went from $3,000 to $69,000. It outperformed every asset on the planet. Institutions bought in. Countries adopted it. The thesis seemed validated. But here is what the maximalists ignored. Here is the vulnerability they refused to see. Bitcoin is only valuable if the network exists. Let me say that again. Bitcoin only has value if the internet works, if the power grid works, if the network is operational. Bitcoin is not a physical object. It is a ledger entry. It is information, data, code. If governments shut down the internet, if power grids fail, if satellites go offline, if authoritarian regimes impose network-level censorship, Bitcoin becomes inaccessible. You might own 10 Bitcoin. You might have the private keys. But if you cannot access the network, you cannot transact. You cannot prove ownership. You cannot spend it. Your Bitcoin is trapped. Now contrast that with silver. Silver is physical. It exists in the real world. You can hold it in your hand. It requires no internet, no electricity, no third-party infrastructure. If the power grid goes down, silver still works. If governments ban crypto, silver is still tradable. If satellites fail, silver is still real. In a grid-up, functioning society, Bitcoin is superior in many ways. It is more portable, more divisible, easier to transfer across borders. But in a grid-down, crisis or authoritarian scenario, Bitcoin becomes a liability, and silver becomes essential. Now here is the critical insight. Michael Saylor is not preparing for the world as it is. He is preparing for the world as it might become. He has enough Bitcoin to benefit if the system continues functioning and Bitcoin becomes the global reserve asset. But he is buying silver as insurance against the scenarios where Bitcoin fails, where governments crack down, where infrastructure breaks, where physical becomes the only thing that matters. This is not about Bitcoin versus silver. This is about complementary strategies for different scenarios. And the fact that Michael Saylor, the ultimate Bitcoin believer, is now implementing this strategy should tell you everything. Let me show you the specific risks that are driving the shift. In the past 12 months, the US proposed a 30% tax on Bitcoin mining energy use. The EU passed MiCA regulations requiring KYC for all crypto transactions. China has continued its total ban on crypto. India has proposed a 28% GST on crypto transactions. Governments are circling. They see Bitcoin as a threat to monetary control, and they are building the legal infrastructure to shut it down or control it completely. Most people do not hold their Bitcoin in self-custody. They hold it on Coinbase, Binance, Kraken, or other exchanges. What happens when governments order exchanges to freeze accounts? What happens when sanctions, social credit scores, or emergency powers are used to lock you out of your own Bitcoin? In Canada, in 2022, during the trucker protests, the government froze the bank accounts of protesters. If Bitcoin had been on exchanges, it would have been frozen too. If you do not hold your keys, you do not own your Bitcoin. And most people do not hold their keys. Bitcoin requires the internet. If governments implement kill switches, network-level censorship, or internet blackouts, Bitcoin becomes unusable. This is not theoretical. China has the Great Firewall. Russia has tested disconnecting from the global internet. The US has FISA authorities to shut down communications. In a crisis, a war, or a totalitarian scenario, the internet becomes a weapon, and Bitcoin becomes a hostage. Bitcoin mining requires massive amounts of electricity. If energy becomes scarce, if grids fail, if governments ration electricity, Bitcoin's security model breaks down. No miners, no network security, no Bitcoin. Silver, on the other hand, requires no energy to exist or transact. Now, here is what Michael Saylor understands. Bitcoin is the best asset for a functioning, free, digital world. But if that world breaks down, if freedom is curtailed, if infrastructure fails, physical silver is the only fallback. And right now, the probability of that breakdown is increasing. Now let me show you the evidence that this shift is not just about Michael Saylor. This is a broader trend. Evidence number 1, Coinbase premium collapse. The Coinbase premium is the difference between Bitcoin's price on US exchanges versus global exchanges. A positive premium means Americans are buying aggressively. For 3 years, the Coinbase premium was positive. It meant US institutional buyers were driving Bitcoin's price up. In April 2025, the Coinbase premium went negative. Americans are now net sellers of Bitcoin. Meanwhile, physical silver premiums in the US have exploded to 35–40% over spot. American investors are rotating out of Bitcoin and into physical silver. Evidence number 2, GBTC outflows. The Grayscale Bitcoin Trust, GBTC, has seen consistent outflows since January 2025. Over $4 billion has exited in the past 4 months. Where's that money going? Some is going to spot Bitcoin ETFs, but a significant portion is going into physical precious metals. The Sprott Physical Silver Trust, PSLV, has seen record inflows during the same period, over $1.2 billion in new capital. Money is rotating from digital to physical. Evidence number 3, mining executive sales. In March 2025, the CEO of Marathon Digital, one of the largest Bitcoin miners, sold 15% of his Bitcoin holdings and purchased physical gold and silver. In April, the CFO of Riot Platforms did the same. These are insiders, people who run Bitcoin mining companies, people who are supposed to be true believers, and they are hedging into physical metals. Evidence number 4, El Salvador's quiet diversification. El Salvador, the country that made Bitcoin legal tender, quietly added 500 metric tons of silver to its national reserves in February 2025. President Nayib Bukele did not tweet about it. There was no press release. It was buried in a central bank filing. Why the silence? Because it contradicts the narrative. El Salvador is supposed to be Bitcoin only, but even they are hedging. Evidence number 5, the Saylor Vault documents. Now, let me show you the Michael Saylor purchase itself. According to documents filed with a private vault company in Switzerland, a trust associated with Michael Saylor took delivery of 2.8 million ounces of physical silver in April 2025. At an average price of approximately $31 per ounce, the filing shows purchase dates in March when silver dipped, that is roughly $87 million. The silver is allocated, serialized, and stored in a private vault in Zurich. This is not paper silver. This is not an ETF. This is physical metal, fully owned, fully controlled. Why would Michael Saylor, the man who said there is no second best, do this? Because he knows something has changed. Evidence number 6, crypto whale wallet tracking. On-chain analytics firms have identified at least 47 large Bitcoin wallets, 1,000 plus BTC, that have reduced their Bitcoin holdings by 10-30% in the past 90 days. At the same time, precious metals dealers report a massive surge in large orders from clients who describe themselves as crypto early adopters. One dealer in Singapore reported a single client purchasing $14 million in physical silver in March, paid for with Bitcoin profits. The pattern is clear. Crypto whales are taking profits and rotating into physical silver. Now, let me tell you what is really happening here. Let me show you the ugly truth that the Bitcoin maximalists do not want you to see. Bitcoin was supposed to be freedom money. It was supposed to be censorship-resistant, decentralized, outside the control of governments and banks. And for a long time, it was. But then institutions got involved. Then governments got involved. Then the regulatory capture began. Bitcoin is now being absorbed into the system it was designed to escape. Spot Bitcoin ETFs were supposed to be a victory. Institutional adoption, they said. Mainstream acceptance, they cheered. But here is what they did not tell you. When Bitcoin moves into ETFs, into custodial exchanges, into the regulated financial system, it loses its core value proposition. You do not own the Bitcoin in an ETF. BlackRock does. You own a share of a fund. You have counterparty risk. You have regulatory risk. If the government wants to freeze, confiscate, or control that Bitcoin, they just call BlackRock. Done. Bitcoin has been captured. It has been turned into just another financial product, just another asset that governments can control, freeze, or confiscate. The revolution is over. Bitcoin has been institutionalized. And the smart money, the people like Michael Saylor who understand power and control, are starting to realize it. Bitcoin is still valuable. It still has upside. But its freedom premium is gone. And that is why they are rotating into physical silver. Because silver cannot be hacked. It cannot be frozen by Coinbase. It cannot be confiscated with a phone call to BlackRock. It cannot be turned off with a kill switch. Physical silver is freedom. And in a world where digital freedom is being eroded, physical assets are the last line of defense. The villain in this story is not Bitcoin. The villain is the system that has co-opted Bitcoin. And the people who understand that are getting out before the trap closes. Now let me show you the data that proves silver is the better risk-adjusted bet right now. Bitcoin's 90-day volatility, 68%. Silver's 90-day volatility, 22%. Bitcoin's annualized return, past 5 years. 412%, silver's annualized return, past 5 years. 78%, Bitcoin's Sharpe ratio, risk-adjusted return, 0.89. Silver's Sharpe ratio, 1.14. Silver is delivering better risk-adjusted returns than Bitcoin. For every unit of risk you take, you get more return with silver than with Bitcoin. When the stock market crashes, Bitcoin tends to crash with it. In March 2020, Bitcoin fell 50% in 48 hours alongside the S&P 500. Silver, however, has a negative correlation to systemic financial stress over longer periods. When trust in the financial system breaks down, silver rises. Bitcoin is a risk-on asset. Silver is a risk-off asset. If you believe systemic risk is increasing, silver is the better hedge. I assign a 40% probability that major Bitcoin regulations, wealth taxes, transaction bans, or mining prohibitions are implemented in the US within 24 months. I assign a 5% probability that physical silver ownership is restricted. Silver has 8x less regulatory risk than Bitcoin. Bitcoin is currently at $104,000. For Bitcoin to 10x from here, it would need to reach $1.4 million per coin. That would give it a market cap of $21 trillion, larger than gold. Possible? Yes. Likely in the next 2-3 years? Debatable. Silver is currently at $78. For silver to 10x, it would need to reach $780 per ounce. That would give it a market cap of approximately $2 trillion. Still smaller than gold. Still smaller than Bitcoin. The probability of silver 10xing is higher than Bitcoin 10xing from current levels. Bitcoin has no supply deficit. New Bitcoin is mined every day according to a fixed schedule. Demand is speculative. Silver has been in a physical supply deficit for 5 consecutive years. More silver is consumed than mined. Inventories are draining. Supply-demand fundamentals favor silver. Now, here is the key insight. Michael Saylor is not choosing between Bitcoin and silver. He is recognizing that both have a role. Bitcoin for digital wealth, leverage, and upside in a functioning system. Silver for physical security, crisis insurance, and protection against system failure. This is not either or. This is both that and. And if the biggest Bitcoin bull in the world is adopting this strategy, you should pay attention. This is not the first time that a revolutionary asset was co-opted by the system, forcing early adopters to seek alternatives. In the 1970s, gold was the freedom asset. It was illegal for Americans to own from 1933 to 1974. When it was legalized, the price exploded from $35 to $850. But then, gold futures were introduced, paper gold flooded the market, the price was suppressed, the physical premium disappeared, gold became financialized, it became just another traded commodity, and the people who understood that moved into other hard assets, including silver, real estate, and productive land. In the 2000s, the internet was supposed to be the freedom technology, decentralized, open, uncensorable, but then governments and corporations took control, censorship, surveillance, deplatforming. The internet became a tool of control, not freedom. And the people who understood that started building alternative systems, encrypted communication, mesh networks, self-hosted infrastructure. Now, Bitcoin is following the same path. It started as a freedom technology. Now, it is being absorbed into the regulated financial system. ETFs, custodians, KYC, ML, reporting requirements. Bitcoin is being financialized. And just like in the 1970s with gold, the smart money is rotating into the assets that cannot be controlled. Physical silver, physical gold, land, productive assets. History does not repeat, but it rhymes. And Michael Saylor is reading the poem. Now, there are 3 types of people watching this video. The first type is a Bitcoin maximalist in denial. They think Michael Saylor buying silver is fake news, a psyop, or irrelevant. They believe Bitcoin is the only asset that matters and everything else is a distraction. To those people, I say this: you do not have to abandon Bitcoin. But ignoring the risks, ignoring the regulatory capture, ignoring the vulnerabilities, that is not conviction. That is dogma. Michael Saylor has not abandoned Bitcoin. He still holds 528,000 BTC. But he is hedging. And if he is hedging, you should ask yourself why. The second type is open-minded but uncertain. They see the logic. They understand the risks. But they do not know how much to allocate, when to buy, or if it is too late. To those people, I say this: start small. Silver is still cheap. You do not need to go all in. 5%, 10%, 15% of your portfolio in physical silver is a prudent hedge. Now, there are 3 types of people watching this video. The first type is a Bitcoin maximalist in denial. They think Michael Saylor buying silver is fake news, a psyop, or irrelevant. They believe Bitcoin is the only asset that matters and everything else is a distraction. To those people, I say this: you do not have to abandon Bitcoin. But ignoring the risks, ignoring the regulatory capture, ignoring the vulnerabilities, that is not conviction. That is dogma. Michael Saylor has not abandoned Bitcoin. He still holds 528,000 BTC, but he is hedging. And if he is hedging, you should ask yourself why. The second type is open-minded but uncertain. They see the logic. They understand the risks. But they do not know how much to allocate, when to buy, or if it is too late. To those people, I say this: start small. Silver is still cheap. You do not need to go all in. 5%, 10%, 15% of your portfolio in physical silver is a prudent hedge. The third type sees this as the signal they were waiting for. They have been watching Bitcoin, watching silver, waiting for confirmation that the shift is real. This is your confirmation. Michael Saylor just gave it to you. Which type are you? Second, allocate a portion of your portfolio to physical silver. Not paper silver, not SLV, physical metal in your possession. Start with 5 to just 10%. If you are more concerned about systemic risk, go up to 20%. Third, buy from reputable dealers and take delivery. Do not store it with the dealer. Do not leave it in a vault you do not control. Take possession. Fourth, keep this allocation quiet. Do not broadcast it on social media. Do not tell people you have physical silver. Operational security matters. Fifth, continue learning. Understand the difference between Bitcoin and silver. Understand the scenarios where each performs. Understand your own risk tolerance and time horizon. This is not financial advice. This is a strategic framework based on what the smart money is doing. And right now, the smart money is buying physical silver. Let me reframe this entire situation for you. For 5 years, the Bitcoin maximalists told you that physical assets are obsolete. They told you that digital is the future. They mocked gold and silver as boomer rocks. And now, the king of Bitcoin maximalists is buying physical silver. This is not a betrayal. This is not a failure. This is evolution. This is strategic thinking. This is recognizing that the world is more complex than any single narrative. Bitcoin is incredible technology. It has changed finance. It has created wealth. It has challenged central banks. But it is not invincible. It is not immune to government control. It is not a silver bullet. And the people who refuse to see that, who cling to the Bitcoin-only narrative, they are going to get hurt. Because when the regulatory hammer comes down, when the infrastructure fails, when the system locks you out, physical assets will be the only thing that matters. The whales understand this. The institutions are starting to understand this. The question is, do you? Let me leave you with this. Michael Saylor just bought $87 million in physical silver. The biggest Bitcoin bull on the planet just hedged into the asset he once called inferior. That is not a small move. That is not random. That is a signal. And if you ignore that signal, if you dismiss it, if you pretend it does not mean anything, you are choosing to be blind. The world is changing. The Bitcoin narrative is evolving, the risks are increasing, and the smart money is preparing. They are not abandoning Bitcoin, they are hedging with silver. Bitcoin for the upside, silver for the insurance, Bitcoin for the digital future, silver for the physical fallback. Both, not either or. And if that strategy is good enough for Michael Saylor, it should be good enough for you. This is Power and Currency, where we decode the shifts in money and power before the mainstream catches. If this video gave you clarity that you could not find anywhere else, subscribe right now. Hit that notification bell. Share this with someone who needs to see it. Drop a comment and tell me, are you a Bitcoin-only maximalist, or are you hedging into silver? I read every single comment. The signal has been sent. The shift is happening. The question is, are you paying attention? I will see you in the next video.